Inauguration comes with a new all-time high. And what does a new all-time high typically mean and typically lead to? Yet another new all-time high. When we get an all-time high, there's a reason for it. And I expect there to be many, many more new all-time highs after today. That said, Mike Santoli shared an interesting chart. We had a previous all-time high before this post-election rally. We kind of had this last second burst, came down, had one large bump, came down, election, burst to new all-time highs. That one before that hump in the middle had a 16% and 3,850% point differential on the S&P between that point and the S&P's 200-day moving average. That same differential is happening again right now. Now, I'm not saying this means that an immediate sell-off is going to happen, but if you're familiar with Ray Dalio, I think Ray Dalio characterizes the disparity between the short-term and the long-term trends very well in a graphic. In his book Principles, any sort of Ray Dalio content you will see a line that's got a consistent slope. You will see, another kind of curve that connects both ends of the line, and then you may or may not see a bunch of small squiggles here and there. I believe, these squiggles are real, and we may be at the top of one of these little squiggles, and the squiggle might come down a little bit. So what I'm trying to say is that the long-term trend is consistent and doesn't change very much. It's there, productivity gains are there, but market exuberance and market fluctuations are there as well. And they aren't as much long-term. They're reactionary to news. So this reactionary Joe Biden presidency, inflation situation, which will result in the continuing of the long-term uptrend, may have been compressed into a recent short-term period. And this max, this differential between the 200-day moving average and the current level is pretty great. And maybe it needs to come down. That said, maybe it won't. The long-term picture is incredibly fertile. Could not be almost more fertile for stocks. So you want to be in the stock market right now. I believe inflation is going to occur. In addition, we have a government that has essentially unanimous consent and wants, in some way, we will see what happens, but they control three chambers. So, and that three-chamber control is in favor of further spending on top of the already poised for inflation environment we are in. So that's going to do well for stocks. It's going to be an interesting environment. We will see what happens with that. But in terms of nominal growth of stocks, nominally they will increase. In terms of real valuations, who knows? We will see what happens. But nominally, stocks will increase. So I would keep that in mind. Nominal growth in stocks is virtually guaranteed in the long run. In the next month, I don't know. It seems like we are very much above the 200-day moving average and we should sell off. That said, if we happen to get disinflation, which I believe we will, yet I don't know the rate of inflation we are going to experience and when that rate of inflation is going to occur. I think it's going to occur once the $15 minimum wage is implemented. But, something that's going to happen that is going to allow this large differential between the current point and the point that we are at in the 200-day moving average is inflation. Because if the market experiences inflation, and the overall economy will have to as well, the slope of the market will increase. And that will pull up the slope of the 200-day moving average. So hypothetically, we may look back at this period and be like, wow, 16-point differential between the market and the 200-day moving average? That's nothing. Well, we will see what happens because, anyways, how am I positioned? I'm largely in. I'm largely remaining with my stocks. I'm not really a, try to time the market very much. That said, I'm not opposed to wise predictions in short-term trends. So when things get hot, I'm comfortable having a cash position. I'm acknowledging the long-term trend and want to have exposure to that, but I also want to be prepared in order to maximize gains to a potential sell-off, maybe not that big, 5% up to 10%, who knows? I want to be ready for that. So I'm going to play that side of the coin as well with the smaller allocation of the portfolio, roughly 10 to 15 to 20% if I'm really feeling at 20%, but I'm not. I'm closer to 10% right now. That includes S&P 500 put options and cash. Those are my hedges against the market, as I would say. Everything else is remaining long. Would I buy right now? I would buy stuff that's well priced, particularly real estate, gold, and energy. Not just oil. I'm delving in, and have been delving in, to some renewable energy. And I think this space is incredibly expensive. Even Tesla, it's a little too expensive for me. But I'm not opposed to a company with a dividend and with good cash flow, at least in terms of energy credits. They've proven a solid business model. Next Era Energy, that is a position I would take a look at. So that's how I'm looking right now. Inauguration day of Joe Biden, preparing for the future, and we will see what happens. So until next time, peace out.